Hi everyone, welcome to another ShareWise webinar. Today, I am fortunate enough to be joined by Merkle Tree Capital. Welcome, Ryan McMillin, the Chief Investment Officer and co-founder. Thank you so much, Ryan, for joining me today.
Cheers. Thanks, Caitlin. Looking forward to it.
So to get us started, could you please give us an introduction on yourself and Merkle Tree Capital?
Yeah, sure. So my background's traditional finance. I worked in London for 10 years at hedge funds and asset management. I was a bit of a crypto skeptic over that time. A friend of mine was right into crypto and had done quite well and an operator in the space. He continued to update me and give me information on it. And finally, I started to have a look at it. And not too long after, we started a fund together, which was Merkle Tree Capital. We launched that in mid 21. So we've been doing that for closing in on 3 years now. What we really wanted to do was make digital asset investing easier for people. So Dean had more experience in converting people, if you will, to have a look at the sector and take it a little more seriously and start to invest. And some people, face the same issues again and again, either not doing their research and buying the wrong thing, or maybe using an exchange that wasn't all that reputable and losing some funds. So there's still, early days, there was more and more issues faced. So one way to address that is to put it into a unit trust with a safe custody. You've got professionals managing it, looking for the best tokens, and that's a lot safer for people to get their heads around, not having to manage private keys and custody assets themselves. So that's what we've been doing for the last 2.5 years. Really enjoying it, and yeah, just looking forward to. We do a lot of education, I guess, on the space. So yeah, looking forward to this chat.
Okay, and why do you think Bitcoin and crypto itself is such a controversial topic? Because it seems as though there's either complete devotees or like really serious haters.
Yeah, it's a good point, and I think there's probably a few reasons for this. I think first and foremost, it's multidisciplinary. So you really need to have an understanding of computer science, cryptography, and even monetary policy, and that's three areas that don't most people wouldn't have a good understanding of each and all. So things like the Byzantine generals problem or the double spend issue. When these things get solved, these are computer science terms. People in TradFi don't necessarily understand, appreciate what sort of a big deal that is. So that's one thing. And then there's obviously, human nature is to sort of have some fear of the unknown. So it is a new paradigm, and it's hard for people to get their head around. There's no model mental map that you can leverage that gives you an understanding of this. So maybe the internet is not a bad one, where it's a whole new paradigm, like I said. But in the 90s, a lot of people told us, a lot of so-called experts told us the internet was a fad and wasn't going to do anything. So you see a lot of that with Bitcoin itself, and it's not surprising. There's also misinformation out there as well. So there are incumbents that are threatened by this, that sort of want to obfuscate a little bit on the issue and keep people under their system. So you might have seen last week the ECB told us all that Bitcoin's failed as a decentralized currency. And I think, the euro's lost 99% of its value against Bitcoin over the last 10 years. So which one's failed? It's hard to point your finger at Bitcoin. But they do have a lot to fear from people being able to opt out of their system. So the government issued currency world is one built on an environment where inflation is mandated. So every central bank has a mandated 2% inflation target. That's decreasing your purchasing power by a minimum, typically of 2%. That's the reported amount. Often it's quite a bit higher than that. And this is an opt-out now to say, no, I don't want my currency to do that, and I can store it somewhere else that has an actual store of value in a currency that's increasingly accepted around the world.
So am I allowed to ask, do you see Bitcoin ever reaching 100K?
Yeah, I personally, I think it's inevitable, and it's not so much. There's probably two things at play there. There's one, the currency that you are calculating that value in is always decreasing in value. So if we're saying US dollar or even Aussie dollar, every year they're buying less and less of anything so that's the denominator side of the equation. And then on the flip side, it's what's the actual protocol doing, what's Bitcoin doing. It's being increasingly adopted around the world. The number of wallet addresses is going up every year. Number of transactions is going up every year. Retailers are starting to, not everywhere, but are starting to acknowledge that they could use this global payments platform for free rather than a Visa or a MasterCard that's going to charge them 3%.
So do you see, like in Australia, crypto or Bitcoin becoming a common payments method?
Yeah, that's hard to say. I think it'll remain pretty niche. I think we'll see it adopted, and we are seeing it adopted much faster in other countries where their inflation rate might be 100% per annum, and they've got no choice. They've got to store their money somewhere else. And if you can store it in somewhere that you can also use as a currency, then great. But in Australia, it's sort of less imperative to be able to have to do that. So it's probably a little slower, remains a little bit niche. And we'll probably see more people adopt it as a store of value rather than a currency to use.
Okay. And I know recently Bitcoin has had a very good run. And I've heard that it's part of the reason is the Bitcoin ETFs. Could you tell us a bit more about that? And if you see Bitcoin ETFs in Australia, perhaps becoming a thing?
Yeah, absolutely. It's a really big deal that the Bitcoin ETFs in the US. For those closely following the sector like we do, you'll have seen, we know that there's been 10 years in the making to get these ETFs through. The Winklevoss brothers that were the first ones 10 years or so ago to first apply, and the SEC denied and denied. They were eventually taken to court and lost, saying that the reasons for denying were arbitrary and capricious. So we've finally seen them accepted in the US, and it does a couple of things. One, it opens up new sources of capital to come into the sector. So you don't have to go to an exchange and open an account and then worry about custody if it's a large amount. You're an unsecured creditor effectively if you leave it on the exchange. And there's a bunch of these new ETF buyers who couldn't previously do that. So whether they're a corporate, is there an individual in the business that takes home the private keys to the wallet, or that's just not going to work. It's too hard. So an ETF opens up a whole new line of investment, particularly from discretionary investors. So and a financial advisor, again, would be the same boat. They couldn't hold assets on behalf of their client, and they might be concerned about them doing it personally. Now they can hold it in a typical exchange traded fund. So that's really easy and helpful. Do we see them more in Australia? I think there is a couple in Australia already, or there's certainly one, I think, at the moment. I think it's changed. It's not traded on the ASX though. So I think we will see the move to the ASX, and I think most brokerage accounts give you access to US stocks as well these days. So they're sort of available. Will Australians be able to do it as cheap as these US ones? That'll be a struggle to compete with BlackRock on that front.
Okay. And speaking more to the fund, what coins do you guys hold?
Yeah, so Bitcoin is a big part of what we hold. The strategy of the fund is to be investing in crypto. You have to be cyclically aware of where you are in the cycle, and the cycles are pretty clearly defined as 4-year cycles based on the Bitcoin halving event. And they have been historically, and we expect that to continue at least to some extent. So there's periods of time where you want to be heavy into Bitcoin, where Bitcoin definitely outperforms the alts, which is every coin that's not Bitcoin. And then there's periods of time like we're heading into now, which is around the Bitcoin halving. Not long after that, typically these alts significantly outperform Bitcoin. So you need to be able to rotate in and out of the two if you really want to time the markets as much as possible. Having said that, you also don't want to be a trader and chase the shiny new thing as well. So really do your research on what sectors you like within the crypto ecosystem, and then choose the best tokens within it. So, some examples of things we really like at the moment would be Solana and Solana ecosystem. We think that cheaper, faster, easier. narrative of Solana versus an Ethereum, the incumbent, which has a lot more activity on it. Solana allows you to do things that Ethereum doesn't. So that is sub-second transactions, being able to mint 1 million NFTs for cents rather than tens of thousands of dollars it might cost on Ethereum. So that's one thing. And another narrative we really like for this cycle is decentralized physical infrastructure network. So that's called DePIN for short in crypto terminology, and things like Filecoin and Render are really some of the leaders in that space. So that's decentralized file storage, which in a way sort of competes with AWS and Google Cloud, so a cloud service provider, just in a decentralized manner. And Render is decentralized GPU power. So really important at the moment for AI. AI will need a lot of GPU. There's not enough GPU power out there. Here's a decentralized way for anybody to get access to it. So you might have seen the videos on ChatGPT made by Sora running around recently.
Yes,
See that
I have seen that.
high fidelity, that takes a lot of GPU power, and that's not even released to the public yet. So when that gets released, we're going to have all of this demand to create video. It's going to be chasing GPU, and we think Render is a a big beneficiary of that.
Wow, okay. And how often are you guys rotating? I assume you're not day trading for the fund?
No, you need to be a professional, a day trader to do that. That's not our skill set. We do the research on the things we want to hold. And typically, so we're very high conviction. We'll have 10 to 15 maybe stocks or cryptos rather in the portfolio. And we don't really trade those at all, except for those 4-year cycles where at the start of each cycle, we'll sort of reassess what we want to be holding going into that next cycle. You might also see in the sector, you'll see every week or 2 weeks, a new narrative will pump. So it might be DeFi, it was AI last week. It might be Ethereum layer 2s. You can't go around chasing the new shiny thing as well, because you'll miss it, and then you'll rotate whatever you sold will have it stay in the sun. So pick the right narratives, pick the best protocols in those narratives, and then be aware of the cycles is how we approach it.
Okay. And so for those that are watching, when considering why they would invest in the fund rather than just directly in crypto. So I know we've discussed security is one. And I guess I'm assuming those that are investing don't really need to know much about crypto, right?
Exactly. So we get a lot of investors through self-managed super funds coming in as well. And I think that's a really good way to do it. So it's sort of, from their perspective, it's set and forget. They've got exposure to the space. They don't have to, to go and do their research and understand exactly what it is. Just have an understanding that maybe a 2% allocation is enough to get some benefit out of it, and all the portfolio construction calculations will support that sort of allocation. So they can go in, don't have to be 24/7 on the sector like we are. So the market does trade 24/7, so it is a little bit different to equities. You don't get a breather at the end of the day or the weekend to reassess where things are going, or even to disseminate and understand some information that's come out in the market as well. So that happens real time in digital assets. So it's a bit different. So it certainly takes the stress off that. And the other one you mentioned was obviously custody. Managing your own keys is a whole new skill set. It's not for everybody. We certainly wouldn't recommend anybody new to the sector to do that. You really need someone to guide you and teach you on that. If you lose your Bitcoin, there is no help desk to call and go and find it. So that's probably the two main things is having professionals that are following the market, understand what's going on. There's a lot of old tokens out there in the market. There's thousands, tens, 20,000 of dead tokens out there in the market. And people are pumping them on Twitter, trying to get people to buy them. So there's a lot of misinformation out there. Professionals can really help you avoid that sort of thing.
And where's the fund and the portfolio clients' portfolios actual crypto held?
Yeah, good question. So we talked about taking custody off individuals' hands. And what we do, we put it in a institutional custody solution with Coinbase. So Coinbase are the biggest one of the biggest custodians. They do the vast majority of custody for all of the ETFs at the moment, which is approaching 13 billion. I think they've got GBTC as well, actually. So that's another, 30 billion or so in there. So they've been doing it for 12 years. They've learned, they've never been hacked, battle hard, and they've also offer insurance on that service as well. So then that's not available to individual investors. It is an institutional solution. So that's a really, another really strong reason to use a fund with good custody.
Okay. So for those that are interested in finding out more, how can they contact you?
Yeah, you can jump onto our website at merkle.com.au and have a look there. We've got contact details on there. You can find me on LinkedIn, lots of different places. So always happy to chat with people. We are a wholesale fund, obviously, so inquiries should be limited in that regard. But education is a big part of what we do as well. So we've got a newsletter. You can sign up to that on our website if you want to just see what we think of the sector over the previous month.
I do think education is key to crypto, because I think a lot of the reason why people are so scared to touch that space is purely because they don't know enough about it. So that's good that you guys are doing that.
It is. That's right. I think the really important message is to get off zero. And even if that's jumping onto an exchange and buying $1,000 of Bitcoin, once you've jumped that fence, you'll pay a lot more attention to the news, and you'll see it go up. You'll read some news and say, why did it do that? It went down. Why did it do that? And you'll get a much better education yourself. That's one way to certainly do it, and we're happy to help others take a more sophisticated approach.
Well, thank you so much, Ryan, for joining me today. It was a pleasure to have you on.
Cheers. Thanks, Caitlin. I enjoyed it.